Okay, hello everyone. So once again, welcome back to our class. Today we are going to discuss a very important topic, central bank and its functions, which is equally important for your board exams and even for any kinds of competitive exam that you will be appearing in future, okay? So you see, before we go into the main discussion, let me just give you a very simple example. In our society or in every family, we consider the father as the head of the family, right? So likewise, even in banks, there is always a head of the banks of our country, okay? And that is the Central Bank of India, that is Reserve Bank of India. Now, every country has their own central bank. In England, Bank of England is the Central Bank of England. In USA, it is called Federal Reserve System, and in India, we call it as Reserve Bank of India, okay? So before we go into the main topic, here are some few points that you have to know about RBI. It was first established on 1st April 1935 under RBI Act 1935. First governor of RBI was Osborne Smith. Then it was only nationalized on 1st January 1949. Its headquarters is at Mumbai, and at present, governor of RBI is Shakti Kantandas. Okay, so remember this for your general knowledge. Now coming to the introduction of RBI, the central bank is the apex institution of monetary and banking system of a country. Apex means head or boss. Monetary is relating to currency. Okay. That is why the central bank is the apex institution of monetary and banking system of a country. Its main role is to organize, supervise, regulates, and develops the monetary system of the country, which is important for 1-2 marks for your exams, okay? Now coming to the main functions of the central bank, you see there are many functions given in your textbook, but we are going to discuss only the 4 most important functions, which is enough for your exams for 8 marks, but more or less whatever we are going to discuss today, everything it includes here, okay? So the first one is issue of currency or pen of issue. Okay, so you have to remember in India, the RBI has the sole authority or monopoly power to issue currency notes in India. And that we also call it as legal tender money. Legal tender money means the payment the payment made in terms of currency notes has to be accepted because it is by law, okay? That is why it is called legal tender money. And that is the first function of central bank, that is issue of currency note or bank of issue. But remember, the RBI cannot issue currency notes as much as they want, as much as they can. They cannot print the currency note as much as they want. There are to be abide by some laws, rules and regulations, okay? And that we call it as minimum reserve system. Under this system, out of rupees 200 crore, 115 crore is in the form of gold and the remaining 85 is in the form of foreign securities. That means the amount of money printed out, rupees 200 crore, will be under minimum reserve system, out of which 115 is in the form of gold and remaining 85 is in the form of foreign securities, okay? And apart from that, if necessary, if more money is needed in the economy, then the RBI will go ahead along with the consultation of the central government, okay? Now, one advantages of RBI being the only authority, sole authority of issuing of currency note is it brings uniformity in the country. Uniformity means one, okay? Just imagine if there are many banks that issue currency notes, then what will happen? It will create lots of misunderstanding among them, isn't it? Because every commercial banks want to be better off. Why? Because their main motive is to earn profit, isn't it? And that will create issues, and that will lose people's faith, trust in them, right? That is why the advantage of the RBI being the sole authority of issuing currency note is it brings uniformity in the country, okay? So that is the first point. Now the second function is banker to the government. Banker to the government. Here government is relating to government of India, central government, okay? Now try to recall back what we have discussed in commercial banks. In commercial banks, we find that commercial bank give loans, advances loans to the public, to the entrepreneurs, to the businessmen, etc., isn't it? So likewise here the RBI also give loans to the government, they accept deposits from the government, they carries out all its banking business activities, etc. Okay, the central bank also keeps its cash reserve like CRR, etc. in the current account with the central banks. Similarly, the central bank accepts receipts and makes payment on behalf of the government. That means, you see, India has ties or economic relations with many organizations, with many other countries of the world. So in that case, when other countries make a payment, the central bank will receive on behalf of the government. Okay, and when India has to make a payment to other countries of the world or to other organizations, the central bank will do that on behalf of the government. And that is all about receipts and makes payment on behalf of the government. Okay, and one more thing you have to keep in mind here is it also manages the public debt of the country. Public debt means the debt, the money that we have to pay to other countries of the world. So when India is in a public debt, when India is in debt, then RBI will make payments on behalf of the government. Okay. Point number 3 is banker's pen and supervisor. Now you see, the central bank also acts as banker's pen and supervisor, mainly in 3 capacities. One is custodian of their cash reserve. We have discussed this many a times, even in the previous topic and even in monetary and fiscal policy measures, that every commercial bank must keep cash reserve as CRR with the central bank. That is all about custodian of cash reserve. Okay. Point number 2 is central bank is lender of last resort. What does this mean? Now you see, whenever the commercial bank find difficulties in managing their activities, when they are short of money, the first thing that they will do is they will try to get help from their neighbors' banks. But if their neighbors' banks fail to help them, that the commercial banks will approach the central bank, that is the Reserve Bank of India. Okay, and the central bank will always be there to help them. And that is all about lender of the last resort. And third, we have clearinghouse for its member banks. The central bank also acts as a clearinghouse for the commercial banks through their accounts. Okay, through their accounts, which means they will make a payment or they will transfer on behalf of the commercial banks to avoid cash transfers. Okay, that is all about clearinghouse. And they will also act as a settlements of the commercial banks through moral possession. This moral possession is a very effective policy of the central bank, and we have discussed this even in the monetary system. Now, what does this actually mean? See, when there is any misunderstanding brought out between 2 commercial banks, then the central bank will encourage them to stick together and solve their problems through mutual understanding and not by force, for the betterment of both the parties. And that we usually call it as moral suasion, as it is a very effective policy of the central bank applied or adopted on commercial banks. Okay, and here you see supervisor is never mentioned in a textbook, but when we say supervisor means whenever commercial banks wants to expand its branch, or the number of employees that the commercial banks employ, all these are looked after or supervised by the central bank. Okay, and that is all about supervisor. Okay, so that is all about the point number 3, that is banker's pen and supervisor. Now coming to the last function that we will discuss today is controller of money, credit and money supply. This one we have explained even in the monetary system. Okay, but we will just go through again. See, this control of credit and money supply is one of the most important tools in our country to control inflation and deflation in our economy. Okay, whenever there is inflation or deflation in our country, in our economy, the central bank used to adopt many monetary measures and fiscal measures. So this is all about control of credit and money supply. So now we will discuss in detail. Whenever there is inflation or deflation in our country, the central bank, through control of credit and money supply, will adopt expansionary and contractionary measures, okay, which are further divided into qualitative and quantitative. But today here we will discuss only quantitative measures, which is relevant to control of credit and money supply. Okay, so now here you see here, whenever there is inflation in our economy, that means rise in price level. And why does inflation occur? It is because people have lots of money in their hand. That is why they are spending lots of money, and that results in inflation. So in order to bring back the economy into equilibrium, in order to bring down the rate of inflation, what the central bank will do is they will adopt contractionary measures. Okay, under this they will apply repo rate or bond rate, open market operations, cash reserve ratio, etc. Okay, just wait for a minute. Sorry, current went off. Okay, so like I was saying, whenever there is inflation in our economy, the central bank will try to bring down the rate of inflation by adopting quantitative measures, especially to contractionary measures like repo rate, open market operation, cash reserve ratio. Okay, so first we will see what is repo rate and bond rate. Repo rate and bond rate, they conveys the same meaning. It is the rate at which central bank give loans to the commercial banks. The only difference is repo rate is only for the short-term loans, that is up to 3 months, and bond rate is for the long-term loans. Okay, so at present repo rate is 4%, bond rate is 4.2%. So what the central bank will do here is they will increase both repo rate and bond rate. When they do that, the commercial banks will be compelled to increase the rate of interest, isn't it? So when the rate of interest rate is increased, then people will be discouraged to take loans from the commercial banks. And when people have less money, then less spending, and inflation rate will be back into equilibrium, right? Okay, next is open market operations. Here the central bank will sell government securities, loan instruments, debt instruments, credit instruments, etc. to the general public or to the commercial banks. Why? Because when they sell it, they are taking away money from the general public or from the commercial banks, right? So which means less money available to people and less spending, and then rate of inflation will be back into normal, right? And lastly, cash reserve ratio. Cash reserve ratio. This is actually, sometimes we also call it as legal reserve ratio. Okay, it is a compulsory payment cash that commercial banks must keep with the central bank. So here the central bank will increase cash reserve ratio. When central bank increase cash reserve ratio, then commercial bank will also increase the rate of interest when public, general public, entrepreneurs, businessmen took loans from them. So when central bank increase cash reserve ratio, then people will be discouraged to take loans from their commercial banks, isn't it? That means less money available with them, which means less spending, and then rate of inflation will come down to normal. Okay, so this is all about contractionary policy measures that are adopted by the central bank when there's inflation in the economy, and the opposite is expansionary measures that are adopted by central bank when there's deflation in the economy. Deflation means fall in price or period of low output, employment, and low income. Okay, so here what the central bank do is, since aggregate demand is low, their motive is to raise aggregate demand. Therefore, they used to apply expansionary measures here by reducing repo rate, bond rate, by buying open market operations, which means giving money to the public, and by reducing cash reserve ratio. Okay, because you see, when the central bank reduce cash repo rate, bond rate, and cash reserve ratio, then the commercial bank will also reduce the rate of interest when public took loans from them, isn't it? Which means people will be encouraged, the entrepreneurs, the businessmen will be encouraged to take more loans from their commercial banks. And when they took more loans, which means more money available with them, which means more spending, and then aggregate demand will rise, isn't it? So you see, these things are very interesting and very easy once you get the logic, okay? So you go through again all these things what we have discussed today, and if there's any doubt, you let me know anytime, okay? Thank you.